So you're thinking about buying your first investment property, your first multifamily building. And so we've created this really neat 7-step process on getting started to walk you through and kind of take those initial first steps to make sure that you have all the right information to make the right decision. So let's kick it off, Caleb. So let's talk about the benefits. I mean, we work with a lot of clients. We've helped so many clients get started. Some people are just getting started. Others are buying their third, their 10th property. What are some of the benefits that you hear from them when they invest in real estate?
Yeah, so that's obviously the first question that we get. And there's two quick answers that jump to the front of the line: appreciation or cash flow. You can't have both, so it's important to choose one up front. Obviously, leverage is real important. It's one of the most leverageable assets that's out there. Unlike stocks, if you want to buy $500,000 worth of stocks, you need $500,000.
So let's talk about leverage really quick. So when Caleb says leverage, he's talking about getting a loan from the bank. And so the best way to kind of explain this is it's possible that the majority of the purchase financing comes from the bank. So you as the borrower are going to put very little down, in some cases as low as 3.5%, 5%, maybe 20%. And the bank is really taking all the risk. They're the ones putting up the money. And so what we say when we talk about leverage or positive leverage is making money on the bank's money. Let's just assume that you're borrowing at 3% interest rate, but we know for a fact, looking back at historical trends, that the appreciation of real estate is 6.3%. So you're making over 3% on the bank's money. They're putting up all the risk. And that's what we're talking about leverage. So let's continue with some of the other benefits that we hear.
So another main benefit is it's a tangible asset. You can go visit the property, you can go touch it, you can feel it, you can make sure it's still standing and operating properly, which is unlike a lot of other alternative investments.
There's a lot of tax benefits to it. And now, while this video is going to be more of an overview, we'll have other videos where we really dig into like what exactly is a tax benefit. But this, at the end of the day, will save you money on taxes because you own this investment. The government is rewarding you for buying property. There's a positive economic attribute that happens when an individual buys a property. So let's talk about partnership. So that's another good thing about buying apartment buildings is that you could partner up. Caleb and I have partnered up together. Sometimes we'll bring someone else in and we're able to bring our proceeds together, go get a loan and go buy a property. So this is something that you don't have to do it alone. You can, but you have the option to partner up. So those are some of the benefits. Let's talk about step 2. What's the main motivation? What's the plan? What's the goal? Let's talk about that.
Yeah, so there's a lot of different driving factors for someone to want to get started in real estate investing. Understanding that is key up front. So some of the main motivations that we hear from investors that we work with is creating generational wealth, something that they can create, watch grow, and then pass on to future generations. That's one of the ones that stands out. Another motivation is cash flow. If you have an asset that's going to give you an extra income at the end of every month, at the end of every year, then why wouldn't you make that jump?
You know, and here's an interesting thing. When we talk about appreciation, we know from historical trends, and we have financial models to prove this, that properties in Southern California, they're going to double every 10 to 12 years. And so here's something that we've kind of come up with. If you want to be a millionaire, buy a fourplex for $1 million. And within 10 to 12 years, it's going to double. It's going to be worth $2 million. As shocking as that is, that has been proven time and time again. Every 10 to 12 years, you're going to double. So if you buy something for $2 million, it's going to be $4 million. So if you want to be a millionaire, I tell people buy your first fourplex. That's a great way to get started. Again, we have cash flow, and sometimes I tell people we're not going to have cash flow in the beginning years. Sometimes we're borrowing so much money from the bank that the rents that come in are going to offset the mortgage. So long as we're at a break even, but the property's appreciating, we're going to be in a very, very good position. Some of the other benefits that some of our clients have mentioned is it's given them freedom. Some folks have been able to retire and all they do is manage their real estate. They love to go water the lawn, check in with the tenants, and it's given them freedom and it's allowed them to retire. And that's just a really big plus. And so when we're talking about the benefits, we want you to know what is it that motivates you? Why are you wanting to do this? And knowing that will help us better guide you. So step number 3 is getting pre-approved. Can you walk us through the process, and does this cost us anything?
It's totally free. The only thing that it's going to require from you is maybe a little bit of time and energy and some homework. Now, the homework's not daunting. Don't worry. All the lender's really going to want to see is tax returns, proof of income in the form of pay stubs, and obviously they'll run your FICO. And with those 3 components, they're able to give you a dollar amount that you can purchase. And with that, we're gonna game plan, make up a strategy that makes perfect sense based on the motivation that we've already discussed, and we'll get the ball rolling, set you up on a search. Now, a lot of people say, Caleb, how long does this take? Again, it costs nothing. In most cases, if you have all the documents already in place, it'll take about 3 days for them to get you your pre-approval letter.
Just to reiterate, it's free. It takes 3 days to get pre-approved so long as you have your documents in order. And some of this stuff is just your tax returns, paycheck stubs. When Caleb talks about FICO, we're talking about your credit score. All that's done by them. You don't put up any of your money, and it doesn't really hurt you in any way. Oftentimes we get people that contact us, they're interested in buying, and there's something holding them back, and they just wonder whether they are gonna be approved for a building. And I say, let's stop wondering. Let's just know for a fact, either you qualify or you don't, but that's gonna give you a really good positive feeling knowing that, hey, I do qualify and I qualify for this amount. Yes, I can pull it off or I don't. And if we can't, then we'll assist you in either improving that credit or maybe saving up a little more money, having a game plan to have enough reserves to be able to buy a building. So that's step 3. Let's move on to step 4, and that's choosing the right agent. Not all agents are made equal. There's a lot of agents, Caleb, that focus in strictly on multifamily, right?
Absolutely, absolutely. And probably the most common mistake that I see investors that we work with make is wanting to work with maybe a friend or a relative, because at the end of the day, it's not that difficult to get a real estate license. Now, it is difficult to do really well and provide the results and give the level of service that the client deserves, but ultimately working with a friend or a relative that's not full-time, that doesn't do this 40, 50, 60 hours a week, it's going to be really, really hard in a competitive market to ultimately purchase the investment that you see is the best fit for you.
And so just to touch on that, some people treat real estate, the profession, as a hobby. They do it part-time here or there when someone reaches out to them. For us, it's our profession. We take it seriously. We invest a lot in our education and getting better so we can provide you the service. And so for us, when it comes to wanting to buy your first investment property, we suggest that you go with a broker that strictly does multifamily. Someone who not only owns this type of property, but someone who specializes and knows all the unique facets in buying an investment property. You will find a lot of residential agents who do a spectacular job at selling houses, but they don't have a lot of history in selling multifamily. So if you're in this area, we certainly recommend that you reach out to us. If you're out of the area, reach out to us because we know other folks in the San Diego area or all over the nation. There are affiliates of ours who we know specialize and will be a good source when buying your first investment property.
And Juan brings up a good point. There's tons of stellar residential agents out there that are really good at selling homes. Now, the reason why he brings up maybe some of the extra challenges when it comes to buying units is there's a whole nother set of criteria, a whole nother set of obstacles that need to be overcome. So working with someone that does this day in and day out is essential because dealing with tenants can be a headache. Making sure that you're given the proper notices and managing the building in the proper manner is huge, right? And so working with someone that's not quite familiar with that, you'll find that a lot of those headaches get passed on directly to you, and everyone's sitting there scratching their head trying to figure out what to do.
So there you have it. That's step 4, and that's choosing the right agent to represent you on your behalf. Let's talk about step 5, which is writing offers. So now we're pre-approved. You've chosen the real estate broker that's going to represent you. So now you're submitting offers. What's that mean, Caleb, when we're submitting offers?
So we write offers day in and day out for clients at all different price points, all different unit counts. And so in a nutshell, there's a few components that are really the main terms of the offer. So obviously one is the price. The second is going to be the escrow period and the down payment. And obviously there's 3 contingencies, which are going to be the physical contingency, the appraisal contingency, and the loan contingency. A lot of agents think that price is really the only way to stand out. Now, when you're working with professionals that, again, do this every day, you'll find that there's ways to kind of chop down some of those contingency periods, outside of price that will make that offer stand out amongst a pool of competitors because let's face it, it's a hot market. It's hard to secure an investment, and so working with someone that knows what they're doing and the different ways to structure an offer is really important.
One of the questions that we get is, how do I know if it's a good deal? If you're working with the right agent, then hopefully that agent is able to show you that you're making a wise decision on this investment, right? We want to make sure that it's going to make you money, that you're not overpaying for the property, and that it's a property that we could make some renovations to it. Maybe we could add some value to it to raise the rents. And so when it comes to choosing the right property, we look at everything that's on the market. We compare to across each other with a program that we have. We call it the Investigator. And so we look at every property out there. We let you know if cash flow is important, you buy this. If location is important, then we're going to show you some properties in that area. And so when writing the offers, we play a very active role in making sure that we advise you. And after the first couple offers, it gets easy. We always tell people don't fall in love with the first property you see, because the market's so hard right now that we're sometimes writing 5 to 8 offers per client to get them that right property, because some things will get outbid and we won't be in a position to win that property. So that's step 5, writing the offers. Step 6, which is the escrow period, which happens after they accept our offer. So once we have the winning offer, we go into step 6, which is escrow. Let's talk about that process. Like, what goes on while we're in escrow?
Escrow seems to be a kind of a tricky subject for a lot of people that are new to this. So in a nutshell, like Juan said, once we have the offer accepted, we can officially open escrow. We'll send them the purchase agreement. At that point, they're going to reach out with some specific instructions to get in that initial deposit. Now, that initial deposit shows the seller that you're serious about proceeding. They now have a little chunk in hand so they can sleep well at night knowing that you're not going to get cold feet and back out. Now, once that escrow has opened, that's when those contingencies that I mentioned before start to begin. If you have let's say a 10-day physical investigation, the clock starts ticking once we've opened escrow. Now, as your representatives, we're going to make sure that we're in a position to succeed. We're going to make sure that we have all our ducks in a row so it's as smooth and stress-free as possible, because like we mentioned, this is your first time. We want to make sure that we're guiding you appropriately and making it, again, as stress-free and as smooth as possible.
A question that we commonly get is, if my offer is accepted and if I don't buy it, do I lose my deposit?
Yeah, that's a number one question. Obviously, when you're putting in 3% of the purchase price or 2% of the purchase price, that's a significant chunk. So when you have the 3 contingencies in place, what those serve as a buyer are protections. Now, it's a very clear process. There's forms that need to be signed to remove each of those contingencies. Now, sometimes we remove several at once. Sometimes, in most cases, we'll remove one at a time. Now, we'll make it very clear that your deposit is fully refundable until we remove all 3 of those contingencies. Again, we'll make it super clear and be very specific when it comes time to remove each of those, so you know what you're getting into, and we'll remind you that, hey, at this point, we need to know whether you're serious about proceeding or whether maybe this isn't the right investment, because we don't want to put your deposit on the line and risk losing it, which in fact we've never done with a buyer ever before. So you're in good hands.
One other thing that we do discuss in this escrow period, that's the time that we're going to have access to investigate the property. So we're going to be able to get the termite inspector out, a home inspector, a plumber who comes out here to make sure that the sewer line is in good shape. Sometimes we get a roofing inspector out there. This is the time where we investigate the property. We have a long list of vendors that we trust. We schedule them right when our offer gets accepted, and their job is to pretty much look under the hood of the car. Make sure how's the plumbing, how's the electrical, how's the roof, the major components. And in times the properties will need work. We negotiate every day, and so at that moment it's when we advise you. We're going to help negotiate repairs, asking the seller to fix these items that we found, or we're going to ask for the seller to lower the price or give us a credit. Now, these are all things that happen in escrow, but just some important facets. You don't buy the property as is, right? You don't have to. You're not going to lose your deposit, and we are given a window of investigation period. At this moment, we're talking every day, several times a day, and we're advising you the entire process. Once everything's done, we close the property, you get the loan, and now you're the new owner. Our job is not done yet. A lot of other agents' jobs are done when they close the escrow. They get paid for their time. We stay on. We have extensive appraisal property management background, and that's when we advise them with forms, how much to lease your property out for, dealing with some of the tenants that have stayed in place, notifications, turning utilities on in your name, which we know sometimes doesn't get done properly, which gets me to step 7, which is ownership. Let's talk about ownership, Caleb. Just kind of give us an overview of what that's like once we're finally there, the final step of owning our first investment property.
Now that we're almost through the process, again, like Juan said, we don't just go away once escrow closes. We're here as your advisors to guide you through that initial phase of ownership, because we acknowledge that this is your first go at it. So when you first take over the asset, you want to make sure that you have the leases in place. We'll handle a lot of this in escrow, but to have your system set up to where you have the leases easily accessible, we'll let you know when it's time to maybe raise the rents. There's a lot that goes into it. So again, having the property management background, owning buildings ourselves, we've done this for a really long time. So we could certainly guide you and position you to have a smooth transition into that early phase of ownership. So making sure that the property is being maximized. So obviously you're buying this because of the income that it produces, and there's certain changes, there's tweaks and improvements that you can make to the property to make sure that you're maximizing that investment. So, we'll come in, we'll take a quick look at the units and we'll say, hey, you could improve the flooring, you could slap some new paint on the walls, maybe add laundry wherever possible. Parking, as you know, in Southern California is always a challenge. So anytime you can give parking to a tenant, not only is that going to allow you to maybe ask a little bit more for the rent, but you're giving the tenant an amenity that's going to improve their quality of life, which in turn makes them stay for a lot longer. The air conditioning is always a big amenity, and when you're able to amenitize a unit, the tenant's going to stay longer, they're going to be happier overall, and ultimately that's going to lead to less headaches for you as a new owner.
We're not going to manage the property for them, but we're going to kind of oversee the ownership for you. One of the things that Caleb mentioned was we try to find out where can we add more parking. Where can we maybe add a patio area that maybe was a common area, but maybe we could enclose it and make it be private to the unit? And where can we add laundry? Now, all this stuff takes money. You need to have a good list of contractors, and that's a benefit about working with us, is that once the transaction's done, once you're the new owner, you have access to all the vendors that we have. And the vendors that we have, we've used for years, we trust them, and they are more than willing to help our clients when we reach out to them. So we don't close the transaction and go away. In fact, we play an active role in making sure that you're making the right decisions. So with that being said, those are your 7 steps. We know you're going to have more questions. This is just the first 7 steps in purchasing your first property. And I guess the next step would be scheduling an appointment with Caleb and I so we could learn more about your investment goals.
We pride ourselves on helping everyone at every stage of ownership, and so having that consultation is the next natural step. Again, so we can understand your motivations, come up with a strategic plan to help you succeed, especially when the market is super competitive. And we look forward to hearing from you because we take pride in what we do and we want to help you on your way to financial freedom.